Hello again, dear traders. Welcome to the new week 7th to 11th of April 2025. As always, I'm Atomashi Daniel, Strategies Global Market Analyst. What an interesting previous week we've had. Last week, it was interesting with Trump's comments coming back to back, okay, affecting the market and giving it huge volatility. Now, we're going to be starting with our fundamental analysis as always. And some of the pairs we're going to be looking at today include the GBP USD, Euro USD, USD CHF, and USD JPY. So let's look at what the market has got in store for us. What should we expect coming into the new week? All right. So today, Monday, we have a somewhat technicals day. Okay, nothing significant to hold on to, no high impact news. So, paradise for the technicals traders. Tuesday also, a somewhat technicals day. It's going to be a very beautiful Monday and Tuesday, very stable. Okay, maybe not much volatility unless Trump decides to come and say something that affects the market or any other important person in the economic world. Um, On Wednesday, we have the New Zealand dollar official cash rate, the RBNZ rate statement, and Governor Ueda is expected to speak. Considering the fact that we'll be looking at the USD JPY, this is important. Okay, Governor Ueda is known to say very hawkish comments that boost the strength of the yen, especially now that the yen has been showing some very strong strength across board, recovering some of the losses had in the last year and the last 2 years. Okay, so it's been strongly bearish. UAW might just come say something that's still gonna boost, that might boost the further bearish movement on the yen. So you want to pay attention to this on Wednesday, probably around the Asian session. And we have the FOMC meeting minutes also. Um, Same on Wednesday. Okay. Of course, we know the FOMC, the Federal Open Market Committee meeting. Okay. They might hint at a possible rate cut in May. Okay, we want to pay attention to that. If there's going to be a rate cut in May, it's going to impact the US dollar significantly. Now, this is also important because the US dollar has suffered some losses in the past 24 to 48 hours, considering Trump's all round tariffs. He implemented tariffs that, for those who don't know, that affected the US dollar, the US economy, implemented tariffs against all the US allies and enemies altogether. At least 10% tariffs on all imports from whatever countries, okay, whichever country that's sending to the US. This then affected the US dollar negatively. We had very strong sell-off of the US dollar when this happened. Okay, China retaliated also with the 34% tariff on all US goods. Okay, but most importantly, aside this on Thursday, we have apart from the Chinese CPI data, we have the US CPI data. It's CPI week. Beautiful CPI week expected on Thursday. Pay attention to that. All the low volatility on Monday and Tuesday could be made up for on Wednesday and most especially on Thursday with the core CPI news. And why is CPI important again? Of course, we know that the Fed's outlook for this year and the next 2 years is to reduce inflation rates. And since the CPI, the Consumer Price Index, is a measure of inflation, you want to pay attention to this data. Lower inflation would mean the Fed's measures are working and good for the US dollar. Higher inflation will mean it's not working as much as the Fed's measures are not working as much as they expect, and bad news for the US dollar, especially considering the tariffs across board. The CPI may actually go up. Okay, this is not much good data, but optimistic data is expected from this guy from the CPI data. Um, and to round it all up, on Friday, we have the PPI. The PPI, while the CPI measures the consumer price index, the measure of inflation on the consumer side, the PPI measures the producer price index. Okay, that's the measure of inflation on the producer side. So as the pro as the goods leave the factories, for example, before it gets to the middleman, what changes in the prices have occurred, okay, in the past 30 days, or in this case, the core PPI is measured 13 days after the month ends. So um, in this, we're going to be looking at possibly for March. Okay, so pay attention to that. And to round it all up again, we have the prelim UM, inflation expectations, and consumer sentiment that, when combined, also tend to affect the markets quite significantly. Interesting Friday. All this data combined, okay, could impact the markets quite significantly. So you want to pay attention to that. That's a good one to end, a good way to end the week on Friday. It's going to be a good way to end the week. All right. So that's for fundamental analysis. Now let's go proper into the chart and see what the charts hold in store for us. As always, we're going to be starting with the Euro USD. We're looking at the Euro USD, GBP USD, USD Swiss, and USD JPY. So what happened in Euro USD? We saw last week on Friday, this guy hit very strong after moving past the 200-day moving average on the weekly chart. It touched strong support levels, okay, of December 2023. That's quite a distance, okay? Went as high as 1.1137 and 1140, okay? And this was mostly due to the tariffs Donald Trump enacted across board that affected the US dollar quite negatively. So if you're gonna look at the demand zone right here, okay, or the resistance zone, you could say that it touched this zone, and hence we had um, a brief reaction there, brief reversal, which, when looking at the lower time frames on the daily chart, we could see that uh, reaction very clearly identified right there. What else is there to note? There seems to be some RSI negative divergence on the daily chart, okay, indicating that there could be a bearish correction after it has touched this significant resistance level. On the 1 hour chart, what do we have? We saw price form a fair value gap earlier in the day. Okay, as it opened up, what happened? Right here, from the fair value gap. If I zoom in, you can see that right here. And we'll try to highlight that a bit. There you go. Now, so far, not a fair value gap, rather, weekend gap. This is a weekend gap. Sorry about that. So the weekend gap has been recovered. It was formed at the early hours of Monday, and it's been recovered already. So any position right now considering trading the weekend gap should be considered null and void. The gap has been recovered. The weekend gap has been recovered on the Euro USD. Now, more significantly, on the 30 minutes chart, we see price move along a descending channel, which on higher time frame, like the 1 hour, 4 hour chart, it looks as though it's a flag pattern, a flag pattern. So we see price move in an uptrend and then trying to form a brief consolidation going down. Okay, hence the key to its future movements or future direction lies in the breakout of the flag pattern. We expect that if price breaks significantly past the resistance level 1.1038, okay, or having formed new lows within the course of Monday, we could mark it at here. Psychological level 1.100. If price breaks above the psychological level of 1.100, okay, and heads above that, we could see price touch 1.1038, and above that, we could see price touch 1068, 1088, above that 1.106, 1106, okay, playing around the psychological level of 1.1100, and above that 1.1130, above that 1.1151. We could see a continuation to the upside. On the flip side, if price breaks key support level of 1.0930, we could see price touch 1.0900 psychological level right here, and below that 1.0871, below that 1.0849. Now, that movement, all that movement is going to be trapped, seems to be trapped within the flag pattern or the descending channel right here, depending on which time frame you're looking at. So let's look out for the break of this guy going forward. In the longer term, this week, because of the tariffs from the US, um, I am strongly bullish, and also because of the formation of the flag pattern, the bullish flag pattern, I'm strongly bullish on the Euro USD. This is for the Euro USD. Next, let's look at the GBP USD. Good. So, for the GBP USD, what happened? We saw price last week, also on Friday, touch significant psychological level of 1.3200. Okay, 1.3200. And the last time it touched this level was, if you follow the vertical line, the 29th of September 2024. Okay, quite a distance, a few months back. All right, as soon as it touched that level, that psychological level, very significant, there was a strong price rejection, and the price rejection is very visible by the long wick. Okay, and the small body there, the inverted hammer with the very long wick. Price rejection, very clearly visible right there. Let's highlight that. There you go. Very strong price rejection. So also we can see on the weekly chart that price is moving very nicely along an ascending channel. Okay, and it's looking to test the support border of that channel right now. On the 4-hour chart, however, we could see it move along also a larger ascending channel, and price seems to have broken past the support border of that ascending channel right here. Seems to have broken past the support border. Okay, he had a very tricky move in that after forming this smaller channel on top of the larger channel, okay, price broke past the larger channel to touch the resistance border of the smaller channel on top to eventually come back down. It's been moving in a very peculiar and funny way, okay, but it considered the resistance border of the previous channel, or the channel on top of the larger one, as a resistance level, okay, key level. Now it's broken past the support border of the larger ascending channel, okay, and further entry at this point seems to be focused around the support, the resistance area here, which we're going to look at in a bit. So strong price rejection, as you can see right there, very strong price rejection. And now it's looking to target the 200-day moving average on the daily chart. So a break of 1.2899 or 2900 psychological level would see price touch 2870, which it has already broken past. Okay, a clear break of that, which will coincide with the break of the 200-day moving average on the 4-hour chart, could see price touch 1.2810. Below that, price could touch 2752. If it goes strongly below that, we could see price touch 1.2707, and below that 1.2641. Okay, and on the flip side, if price happens to head back into the range of the larger ascending channel by the red lines there, we could see price touch yeah, we could see price, if it goes and breaks past 1.2958 resistance level, price could go beyond that to touch psychological level of 1.300, and above that 1.3041, above that 3084. Above that, we could see price play around the psychological level of 1.3100. Beyond that, it could eventually go back to retest the resistance border here of 1.3156. Never rule anything out. It's a Trump presidency. Volatility is usually quite large across the board. Now let's retake our support levels here. If price breaks past 2900 psychological level, we could see price touch 2870. Below that, 2829. Below that, 2800. And below that, 2755. Below that, 2713. And if it goes beyond that, 2682. My outlook on this guy, of course, because of the tariffs, weaker dollar. However, I see the euro and the pound Euro USD and GBP USD have a brief bearish move before an eventual continuation to the upside. Okay, so in the short term, today, tomorrow, I'm considering strong bearish moves. Okay, especially in reaching the 200-day moving average, setting the 200-day moving average on the 4 hour on the daily chart as a target. And the price level would be 1.2810 or the psychological level of 1.2800. So I consider bearish positions in the short term, okay, but in the general outlook, if the tariffs continue and the recession fears in the US continue, we could see psychological entries in the market, psychological sell-off of the US dollar, thereby weakening the US dollar and giving it a very bearish outlook. Hence, GBP USD, Euro USD could go long, bullish in the longer term. All right, that's for the Euro USD and GBP USD. Let's look at the USD Swiss. Let's look at the USD Swiss. There you go. There you go. So on this guy, what do we see? First off, we've established that all this bearish movement on the USD series has been a reaction to the 200 moving average on the weekly chart. Okay. In the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 11, 12 weeks now, it's been strongly bearish and it has finally touched a key support level of 0.8550. Okay. 8550 psychological level corresponding with the previous support level here of which particular date, say July 2023. Okay. It's touched that and seems to be reacting to that. That's what we have on the weekly chart. We see price at a support point at this period of time. And on the 4 hour chart, we see it very strongly oversold. On the RSI, markedly oversold, and it's looking to go above the 30 watermark, which could signal a buy. On the daily chart also, it's still also strongly oversold. On the 1 hour chart, however, um, RSI is showing us positive divergence, market positive divergence. Price is headed down, but on the RSI, we see the RSI pointing upwards, indicating that a possible bullish correction could happen in the short term. Okay. Now, unlike the Euro USD and GBP USD, the weekend gap that formed has not been fully recovered yet. Okay. It formed the gap up to here, recovered it up to here. We still have about 17 to 20 pips to recover, going by 8583 to 8600 level. Okay, so there's a good chance that price could go back to try to retake that, to try to recover that gap. In the meantime, however, we see a very nice trend line. Okay, connect the swing highs on lower time frame, the 15 minutes chart. Hence, a break above key level 0.8544 and the trend line above the trend line could see price touch 8568, 8583 or 8600 psychological level, and if it goes beyond that 8617, above that 8653, highly unlikely, and considering the bearish outlook is quite strong. If it breaks below 8480, we could see price touch 8450, below that 8407, okay, and below that, of course, psychological level 8400. Now, what's my take on this guy? The corp is looking strongly bearish. I'm bearish, but in the short term, because it's formed reversal patterns on the 1 hour chart, back to back, one, two, three. When it starts to form higher lows and if it breaks the trend line, we could see a brief movement up before an eventual continuation to the downside. So in the short term, I'm bullish, okay, but in the longer term, maybe throughout the course of the week, Thursday, Friday, we could see a continuation to the downside on the USD Swiss. Look out for that. All the news that could affect this guy right here, we already talked about them. the FOMC minutes, the CPI data we talked about earlier, and the PPI data, the prelim UM consumer sentiment and inflation expectations. The last but not the least, ladies and gentlemen, the USD JPY. What do we see? So, of course, heads and shoulders on the weekly chart still telling us that and broken past one of the key neck levels, okay, making price look still strongly bearish. On the same weekly chart, of course, we see a smaller channel within the larger channel, the red lines, okay. And last week, we had an interesting pattern form. Last week, the close of the candle of last week completed a very beautiful continuation, bearish continuation pattern called the falling three method. As you can see right here, the bear, the three bulls within the range of this bear, and then the bear that breaks past the range of the three before it, and then the first bear, okay, that started it. Here we have falling three method by price action and candlestick analysis, candlestick patterns. This indicates that the bearish outlook is strong. Price could continue to the downside. Look out for that. However, this is happening at the support border of the larger channel. Because it's happening at the support border, there's nothing stronger than um, support border on the weekly chart, okay, or support on the weekly chart. Pay very, very, very keen attention to this. It's looking strongly bearish by way of candlestick patterns, but because it's on the support border of a weekly chart, of a channel on the weekly chart, you want to be very careful choosing bearish positions. I'm going to wait for clear breaks, okay. If I'm going to sell, I'll be waiting for clear break of this previous low here, right here. We could be price level of um 1.4454, psychological level to be precise, 4450. Okay. If it breaks that past that clearly going down, then we'll see price touch further support levels, okay, in the future. In the short term, however, if you look at the daily chart, what happened? Price at first broke past the resistance border of a descending channel, broke away from it, and then came back down again. Okay, it's looking like it wants to retest it. Who knows? We don't know anymore. It wants to return into the channel. Okay. Now, further moves on this guy will depend on the range it has formed. The breakage of the range it has formed, the demand and supply zone is formed on the 15 minutes chart. So we see price move very nicely along the range. Okay, which if you look very clearly, you see that there's also a weekend gap that formed at the start of Monday. However, the weekend gap has been recovered, ladies and gentlemen. Any position centered on this weekend gap in the course of the week is null and void because the gap has already been recovered. More importantly, we see this demand zone or resistance zone and then support zone right here. Then we see price move nicely along a descending channel. So for me, a break above 146.45 could see price touch 46.83. Beyond that, psychological level of 47.00. Above that, 47.33. Above that, 148.00, which is highly unlikely for it to go as high as 148. Okay, but it's Trump's time. Okay, don't rule any possibility, rule out any possibility. Um, yeah. On the flip side, for support, if price breaks past 145.00 psychological level, which it seems to be struggling to clearly break past, if it breaks past that strongly again, it could touch 1.144.54. Okay, which between that we see the support zone right there, the green line. Here we see the resistance zone, the yellow rectangle. Here we see the support zone, the green rectangle. Below 144.54, price could touch psychological level of 144.00. Above that, 43.51. Sorry, below that, and below that, 143.00 psychological level. Ladies and gentlemen, my take on this guy, of course, as always, I'm still bearish. The bearish outlook is still quite strong, especially with Governor Ueda to speak on Wednesday. His comments are usually mostly hawkish, favoring the yen. It could drive the yen strongly bearish this week. In the short term, I'm bullish. In the longer term, in the course of the week, I'm bearish. Okay, on the USD yen. All right, that ends our weekly market outlook. It was great to have you. As always, I'm Atomashi Danovic, Strategic Global Market Analyst. We have another conference coming up for those around Kaduna and Kano. Be on the lookout for that. I'll see you again next week. Remember, the trend is your friend and always trade within the trend. Have a good one.